This is Matthew Cratter's Bitcoin University. Today I want to talk about Bitcoin melting down. It was really fun crossing 100K to the upside. Now that Bitcoin has crossed 100K to the downside, not quite as fun. Bitcoin currently trading at 95,000 and after having hit some lows down near 93,000. In fact, Bitcoin is crashing to levels not seen since an entire 2 weeks ago. It's amazing how short the market's memory can be. We last traded at these levels on December 5th. And it's also amazing to think back that just a year ago on December 31st, approximately, Bitcoin closed at around 42,000. So it's important to put these things in perspective. Even with this flash crash, Bitcoin has still returned 130% this year. I love this tweet from CZ from December of 2020, waiting for the new headline, Bitcoin crashes from 101,000 to 85,000. We're seeing something similar, and this is how it always is. 2023, Bitcoin crashes to 16K. 2024, Bitcoin crashes to 95, 94, 93K. Soon, Bitcoin crashes to 600K. So it's important to keep these things in perspective, and we're now seeing daily price fluctuations that are larger than the initial cost basis of many hodlers, which is interesting to see. You may have heard Bitcoin is indeed volatile, but this is what you would expect from an asset with a fixed supply, meeting a chaotic world where the money doesn't have a fixed supply and where monetary policy depends on just a few people and they can be quite fickle. You can imagine the ocean coming into a swimming pool. That's really a good metaphor, I think, for the fiat world sloshing in and out of Bitcoin the past 15 years. This is one reason that Bitcoin is so volatile, because the amount of value, economic value outside of Bitcoin is still much larger than the amount of economic value inside of Bitcoin. So it just takes 1 or 2% of that value outside of Bitcoin coming in or moving back out to have a huge impact on Bitcoin's price. It only takes a small allocation from this $500 trillion ocean to cause giant waves in what's the Bitcoin swimming pool. I like Fred's quote here: short-term Bitcoin is inherently unpredictable. Long-term, it's very predictable. The winners in this race are those who stack relentlessly and completely ignore short-term movements. The traders will get chewed up, liquidated, discouraged, and eliminated. Especially if you're using leverage, that makes this even more painful. But over the long term, we can see that the price of Bitcoin really does only one thing, and that is go up over time, because Bitcoin is scarce, whereas fiat is infinite. It could be much, much worse. Imagine you could be lying awake last night knowing that you own proof of stake toilet paper like ETH or Cardano or something like this, instead of owning Bitcoin, which allows you to sleep well at night. Here's a chart of Ethereum continuing to lose value against Bitcoin. This monstrous product came across as an ad in my X feed. Leveraged Ether linked exposure with 2x Ether ETF. So that allows you to lose twice as fast if you want to own Ether. So what's causing this market-wide sell-off, where it's not just Bitcoin but also stocks and crypto selling off? The Fed was definitely more hawkish than people were expecting. Also, I think the market is beginning to look ahead to the volatility of a Trump administration that wants to massively and quickly cut government spending, which I think is the right thing to do, but it's definitely a tricky thing to do with debt to GDP levels still so high, because the government spending is still a huge percentage of GDP. And so this is one thing that may be happening. People are adjusting their portfolios ahead of this. Whatever the cause, though, remember that cheap sats or cheaper sats are a blessing, and that you should be more stressed when Bitcoin is melting up rather than melting down. This is when I feel stressed these days. When Bitcoin goes sideways or goes down, I'm pretty relaxed. When it's melting up, I get a little bit stressed, thinking that we may never see these prices again. And so this is nice to have a bit of a breather here. You should be more stressed when Bitcoin is melting up, because it means that your fiat buys you less and less BTC. The really sad thing, though, is at the end of the day, everyone, especially the government who taxes us, is probably going to just tell us that we got lucky, that we had it easy, and that looking back, everyone thought that this was what it was like to hodl. But those of us who have been hodling for many years now know that the latter portion down here is what it actually looks and feels like to hodl. Fortunately, Bitcoin has had a good year in terms of increases in purchasing power against almost every other asset, and so that makes it a little bit easier. But this is something to expect, and this is why it's good to dollar cost average in. It's why it's a good idea to avoid leverage as well, and it's a very good idea to continue to do research and understand what you own. That will enable you to survive this volatility. If you have time later in the day, I'm going to be joining BTC Sessions over at his YouTube channel for the 4th annual BTC Sessions HODLiday special. And there are a bunch of different panels. I'm going to be on the home mining panel, but you can join the macro panel, the freedom tech panel, and then I'll be on the home mining panel with Bitcoin Mechanic and Preston. So be sure to check that out. I'll put a link in the description notes below, and you can join via a YouTube link. So I hope to see some of you there. And if you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.